Imagine having the power to turn a single dollar into a life-changing sum of money. Sounds too good to be true. Think again. Warren Buffett, one of the most successful investors in history, has done exactly that with his initial $100 investment. He's built an empire worth over $30 billion. But what if you didn't have the luxury of starting with $100? What if you only had $1? That's where the magic happens. In this video, I'll reveal the secret to turning your $1 into a staggering $100,000 by the end of this year. It's not as complicated as you might think. In fact, it's quite straightforward once you understand the principles involved. As we explore this concept, let's keep in mind that Warren Buffett didn't get to where he is today by making reckless investments. He's a master of patience and discipline. He waited for decades for opportunities to present themselves before making calculated bets on companies he believed would grow exponentially. You don't need to have an IQ of 160 or a degree from Harvard to replicate his success. The key lies in understanding the underlying principles that drive wealth creation. It's about identifying trends, spotting undervalued assets, and being willing to take calculated risks. Now, I know what you're thinking. Is this really possible? Can I truly turn my $1 into $100,000? Well, let me put it this way, the odds are stacked in your favor. With the right mindset, knowledge, and strategy, there's no reason why you can't achieve this goal by the end of this year. So, buckle up and get ready to learn the secrets that will transform your financial future. It's time to stop dreaming about being a millionaire and start taking action towards making it happen. Warren Buffett's incredible success is a testament to the power of long-term investing. With an initial investment of just $100, he managed to accumulate over $30 billion in net worth, making him one of the wealthiest individuals in the world. While we may not have access to the same resources or opportunities as Warren, his story serves as a powerful reminder that even small investments can yield remarkable returns with the right strategy and mindset. The key to Warren's success lies in his disciplined approach to value investing. He has consistently invested in companies with strong fundamentals, demonstrating an unwavering commitment to long-term growth rather than short-term gains. By holding on to these investments for extended periods, he has been able to ride out market fluctuations and capitalize on compound interest. But what about the rest of us? Can we apply Warren's principles to our own financial lives? The answer is a resounding yes. While starting with $1 may seem like a daunting task, it's essential to remember that even small amounts can add up over time. Consider this: if you were to invest just 50 cents per day at an average annual return of 7%, you'd have around $15,000 by the end of the year. Warren Buffett's jaw-dropping success story is a testament to the power of smart investing. His journey began with an initial investment of $100, which he used to buy shares in his first business venture at just 11 years old. Fast forward to today, and that same investment has grown exponentially to over $30 billion. While we may not have access to the same level of capital or business acumen as Buffett, we can still learn from his strategies and apply them to our own financial goals. The key takeaway from Warren's story is the importance of patience and a long-term perspective. He didn't make his money overnight. It took decades of careful planning, research, and smart decision-making. One strategy that Buffett employs is called value investing. This involves identifying undervalued companies with strong fundamentals and buying into them at a discounted price. By doing so, investors can potentially reap significant returns as the market recognizes the true value of these businesses and their stock prices rise. Let's take a look at some real-life examples of value investing in action. Take Microsoft, for instance. In 1986, Buffett invested $1 billion in the company when its stock price was around $10 per share. Today, that same investment would be worth over $20 billion, an astonishing 2,000% return on investment. Another notable example is Coca-Cola. Buffett first invested in Coke in 1988 and has since added to his position multiple times. His initial investment of $1.3 billion has grown to over $15 billion today. These kinds of returns are not anomalies, they're the result of a well-executed long-term strategy. Buffett's success story is not just about investing in individual stocks, but also about understanding the underlying fundamentals that drive their value. He looks for companies with strong balance sheets, competitive advantages, and talented management teams. By applying these same principles to our own investments, we can potentially achieve remarkable returns. Warren Buffett's incredible story serves as a beacon of hope for anyone looking to transform their financial lives. His secret lies not in luck, but rather in patience and a deep understanding of the market. By diversifying his investments and adopting a long-term approach, he was able to turn a modest $100 into an astonishing $30 billion. While we may not have access to the same level of capital or expertise as Warren Buffett, we can still apply the principles that guided him to our own lives. The key is to start small and be consistent in our efforts. By turning your initial $1 investment into a substantial sum by the end of the year, you'll not only achieve financial freedom but also develop valuable skills that will benefit you for years to come. One of the most striking aspects of Warren's success story is his commitment to value investing. He would often seek out companies with strong fundamentals and potential for growth, rather than chasing after high-risk stocks or get-rich-quick schemes. This approach not only minimized risk but also allowed him to capitalize on emerging trends in industries such as technology and retail. As we explore the various strategies that can help us turn our $1 into $100,000, it's essential to remember that patience is a virtue. Investing is not a sprint, it's a marathon that requires persistence, discipline, and attention to detail. By staying focused on your long-term goals and making informed decisions, you'll be well on your way to achieving financial success. Moreover, turning your $1 into a substantial sum by the end of the year will have far-reaching implications for your personal life. You'll not only experience financial security but also gain confidence in your ability to achieve your goals. This newfound self-assurance can translate into various areas of your life, empowering you to tackle new challenges and pursue your passions with renewed enthusiasm. As we continue to explore the journey of turning a modest $1 into a substantial sum of money, it's essential to highlight a critical aspect that separates successful investors from the rest. Warren Buffett's astonishing growth, from an initial $100 investment to over $30 billion, is a testament to the power of smart investing. What makes this feat even more remarkable is the fact that Buffett started with a relatively small amount of money. He didn't have access to vast resources or leverage. Instead, he relied on his intellect and research skills to make informed decisions. This approach can be replicated by anyone, regardless of their initial capital outlay. One key takeaway from Buffett's success story is the importance of patience and time. His investments span decades, allowing him to ride out market fluctuations and reap the benefits of compounding interest. While we may not have a century to invest, we can still apply this principle by adopting a long-term perspective. To illustrate this concept, let's consider an example. Assume you invest $1 in a high-growth stock with a potential for 10% annual returns. Over 5 years, your investment would grow to approximately $3.20, assuming compound interest is applied annually. While this may not seem like significant growth at first glance, it highlights the power of consistent performance over time. In contrast, suppose you opt for a riskier strategy, focusing on quick gains rather than steady returns. This approach often leads to significant losses or, at best, modest gains that fail to keep pace with inflation. Warren Buffett's success serves as a reminder that slow and steady wins the race in investing. By adopting this mindset and leveraging time to your advantage, you can dramatically increase your chances of achieving remarkable growth, transforming your initial $1 into a staggering $100,000 by year-end. As we conclude our journey to transform your $1 into a life-changing $100,000 by the end of the year, I want to emphasize that this is not just about making money, it's about building wealth and securing your financial future.